Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the euro dollar, the European euro versus the US dollar. The date is February 23rd, 2020. We are looking at the weekly chart for the euro. And if you want to stay up to date with all of our weekly charts for the euro, make sure you click that red subscribe button on the bottom right hand corner of your screen. Okay, so I've got a couple notes here. Sentiment long-term bearish, right? The euro's really been on a big sell-off. Price kind of kicked in, and selling finally resumed. Saw some really strong U.S. dollar action the last few weeks. But I do want to call out that we might see some short-term bullish sentiment, and the reason why is because we got multi-year support. So let me go ahead and actually drop off these two lines, these short-term ones, to show you. Look at where price is sitting. Price dipped down and then did a bullish doji. I mean, it's not very big. It wasn't like it's a big reaction, but price did hang above this level. And why that's important is if we go back to 2017, we can see 1, 2, 3, 4, 5, 6, 7, 8 touches that year below or above this price line. It's almost exactly. And then all the way back to 2015 and 2016, we see the same thing, price testing this line above. So while I don't think that the euro downtrend is over, there might need to use some caution in the weeks ahead because we might see price, at least resist here for a little bit, make a little bit of a kickback before resuming down. So let's go ahead and do some parallel channels to see where that throw kickback might be to. So here we see a zone right on that line. If we were to draw another one, we see here. So we're definitely in a bearish descending triangle. That's an important thing not to forget. We can see this trend. I'm going to change the color of this one to this. Okay, now I've got weekly R1 and R2 mapped out because that'll tell us if price were to kick back, where would it kick back to. And R2 is this $10 mark. And that's probably where it would go. R1 at 109.17. So let's map that out. And now let's zoom into our daily. Okay, so Friday, big bullish candle, right? So price plunged through there, tricky. Then it shot back up above with a really strong bullish candle, meaning we kind of see a similar action here too, right? Price went pushed below, but then for the next several weeks continue to push back. So that means we could see another similar pullback all the way to the $10 mark. And we're looking at daily candles. We look at this timeline. That could take a while to pan out because what could happen is we get a short-term trend here. It goes up to $9.17, hangs back, slowly moves back through. But considering we just had this massive sell-off, at some point we have to get the retrace, right? There has to be a retrace to every fall. Let's go ahead and use our Fibonacci tool. This is a perfect time to use our Fib retracement. So you click on the ultimate top of your recent trend, drag ultimate bottom, very bottom of that candle. There we go. Okay. So we see that the $10 mark is the 50% Fibonacci retracement point. The 38.2 is about $9.55, so that's about halfway through, right? So that's also another potential scenario that price kicks up to this $9.55 mark. We do see some minor support and resistance right there. That's pretty probable, right? So every time you enter a Forex trade, it's possible that price will go up or price will go down. We need to figure out what's the most probable for your entry. You can make money going any direction at any time on any chart, but you have to make sure you enter the market at precisely the right time. That's all that really matters. So here, because of the historical facts we've talked about, this might not be the best place to enter a sell. I might want to wait for a kickback to this line, because I'm getting a feeling that another parallel is happening, and maybe it looks, well, if it looked like that, that wouldn't be too bad. Here we go. Maybe this is what's happening. I think, there we go. So now this would keep our rally limited. So price could just go back to here, the $08.87, possibly peek through and touch R1 for the week before resuming down. So that's very possible. What concerns me, though, is we go back to here and we look at this multi-year trend, right? So is this line going to give up that easily? I mean, maybe it's possible. So that's what we'll look for this week. Look for how far is this retracement going to go. And a great way to do that, right, like we do in all of our charts, is apply that simple moving average. And let's do our 20. Okay. So every time price really moves away from the fast moving average, eventually it'll want to kick back. Looks like it could come back, kick back, and touch right around R1 or this 23.6 resistance line. So it looks like we've got a little bit of a support zone happening, right? So there you go. That's our short-term scenario. Short-term bullish. Next couple of days we could see price continue up, but I don't think that rally's going to go too much past this R1. There's a whole lot of things, a whole lot of different scenarios, selling scenarios ahead of it. And I really don't like the idea of getting in front of this with a buy, right? So I'm definitely looking for my next selling opportunity now to stay with the big trend. Okay, I hope you make lots of pips this week, and you are very profitable. We'll talk again soon.